Hello, good morning. Clifford, the 25-year trader, back with another midweek futures market update. So today, um, just taking a look at everything. There's a lot of things happening today. We got the Fed meeting here at 2:30 p.m. Interest rates are supposed to be 3.75%. We will have to see what they do. Um, some analysts believe that they might come out uh, dovish, which means that if they indicate that there could be interest rate cuts in the future, then, that would be bullish for stocks, obviously, um, bearish for the dollar usually, and all that. But we don't know if they're going to indicate a cut because the elephant in the room is now the war and the oil prices rising back above almost $100 a barrel. And that's the elephant. Because if the thing is, if they're worried about inflation, then they could come out hawkish. So I mean, we don't know what they're going to say, but without those fundamentals in play, if we just look at the charts, this is the S&P 500, and as you see, we are stuck in a range. This is a sideways channel. Channels eventually break the range, and when they do, they could lead to explosive moves. But with the Fed meeting around the corner, I would say that, there's really you could some traders like to play the range, like, they'll buy at the bottom of the range, maybe sell when it gets close to the top of the range. Other traders like to sell at the top of the range, maybe buy back when it gets close to the bottom of the range. That's about all you can do in a sideways market. This is a bullish signal here, right here on March 10th. you know, it rejected this support level here that I was watching last week, 66.39, and it went all the way down here when oil prices rose to like $115 a barrel. So again, that's the elephant in the room. Um, if you were bullish, yeah, you could buy this dip if it, like, let's say the Fed did come out temporarily hawkish and then the market did test this level, you could buy this and put a stop below and look for a bounce. But what if they come out really hawkish? That support might not hold. So rather than, trading is a game of probabilities, obviously, and we're taking educated guesses, speculative bets, whatever. But why bet? Why speculate when we don't really know what they're going to say, right? That's the goal of trading is to not look at it as a betting game. We want to use probabilities instead. So what I would do, in my opinion, I'm going to wait to see how the market reacts today, and then I will make my trading decisions based on that. Now, obviously, I'm a technical trader, so if I get a, let's say I get a rally above resistance, okay, yes, then I will buy the dip because I know that the market is telling me that it wants to move higher. But if I get a close below this level here at 66.39 and the market closes below that level on a daily close, then I definitely would sell the rally because that indicates bearishness. Um, as far as the equities go, that's about all I see over here. Again, oil, it's holding this trend. So that's also bearish for stocks, especially if oil, if that Strait of Hormuz stuff doesn't get resolved soon, this could be some serious implications if it starts to rise back up here. So um, could even force a recession. Gold, interesting enough, not the safe haven right now that everyone thought it would be. Um, what else we got real quick? And this is why the dollar. See this strength in the dollar? This is called flight to quality. Um, Sometimes investors use different instruments when fear hits the market. The way you know that fear is hitting the market is you want to watch this one, the VIX. When the VIX starts to rise, this is the fear index for those who don't know. And as VIX rises above 23 here, all the way up here to 30, that's serious fear. Sometimes investors will flock to different instruments like gold, you know, like they did maybe back here in January. Other times they might flock to the dollar because, the dollar is like a safe haven. At least it used to be with all the debt the US has. That could be changing, but at the moment, that's where they're flocking. And as you see, they've been flocking ever since the war started to the dollar. So dollar broke above resistance right here. I think this is dollar bullish. So, you know, but again, depending on what they say today is going to indicate the direction of the dollar. Like again, if they're hawkish, this thing could rise right above 100. If they're dovish, you could see the dollar start to fall. So again, for me, it's just wait and see. One last thing, if anyone looks at the grain market, I think this is definitely bullish because the thing is, like, as oil prices rise, that's going to push up these agricultural commodities too, like corn, wheat, and soybeans, right? Um, so that's actually bullish. So, buying these dips in grains has been pretty good so far. Also, this is seasonally the time of year where grains start to get planted in the ground soon, and based on the planting and all the weather related things that could happen during planting season, grains are usually bullish starting in the end of March. So I did notice that was an interesting observation there in the grains. And then last but not least, a few of the Mag 7. I was watching these the other day. Not much going on, just a standstill. Again, they're waiting for the Fed, I think. Nvidia, still watching that support level at 170. Microsoft, Tesla, yeah, not much going on there. So again, it's kind of like a wait and see. And last but not least, I will say Bitcoin. You know, some analysts believe that Bitcoin is a barometer for risk. So like if Bitcoin's going in a bull market, that's actually bullish for risk on moves, right? Like buying stocks and buying commodities, whatever. But when Bitcoin's in a bear market, kind of like it is now, searching for a bottom, that could indicate sometimes when Bitcoin sells off, you could see equities follow and things like that. So some analysts do watch that. Me personally, I'm watching Bitcoin, but I don't see any. It looks like it might be trying to kind of just consolidate a little bit. So we'll see what happens with that. But that's about it for today's midweek futures market update. Keep your eye on that Fed report at 2:30. Let's see how the market reacts, and then I'll be back with you guys in another video Sunday night. And as always, you know, never risk more than 1 to 2% of your equity on any given trade, and that'll keep you alive as a trader for the long haul. Thanks again for watching.